3, 2, 1, let's get started.
Welcome everyone to ConnectPay's webinar, exploring the PPP Flexibility Act, understanding the new rules, and adjusting your spending plan. My name is Matt Venuto. I oversee the sales efforts for ConnectPay Payroll. We're excited to have you with us today. I'll start by introducing Richard King, who heads up our technology team. Richard has 40 years experience in payroll and tax software. Welcome back, Richard.
Thank you, Matt, and good morning, everyone.
And I'd like to introduce Drew Schildwachter, who heads up our operations for ConnectPay. Welcome back, Drew.
Good morning and welcome, everyone.
Before we begin, we'd like to remind you that this is an informative presentation only. We focus on the payroll aspects of these new laws. We do not claim to be lawyers or accountants and are not offering legal advice. In fact, ConnectPay's business model is what we refer to as connected payroll. Our mission is to connect and work with our clients' trusted advisors to provide the best advice. With that being said, today's objectives are to discuss the recent changes to the PPP loan and how we can maximize these changes to our favor. In today's webinar, we'll cover the newest revisions to the PPP loan forgiveness program, which includes the extension of the 8-week period to 24 weeks, the PPP loan application deadline of June 30th, the 75-25 split rule reduced to 60-40, the rehire deadline change from June 30th to December 31st, some changes to the FTE safe harbors, new PPP loan maturity period of 5 years, employer Social Security tax deferral, the extension of the loan forgiveness period, as well as the new loan forgiveness 3508 EZ application. We will review the PPP Flexibility Act for roughly 25 minutes, and then we'll open it up to questions. Quick reminder here that as a ConnectPay client, you have free access to the ConnectPay HR Resource Center until the end of August. Prior to the pandemic, we improved our HR Resource Center, which now includes on-demand webinars on various HR, retirement, and benefit compliance topics. Most importantly, it offers direct line communication to employment law and ERISA attorneys. In addition, there's a library of resources containing model job descriptions, handbook builders, state-by-state regulations, and much more. Please click on the link to explore further, or you may inquire directly on our website under Tools and Resources. You can schedule a demo on our website at any time. This service is complimentary for 6 months and will only cost $24.99 per month thereafter if you do choose to continue with the option. So as I mentioned before, we will take questions and answers from the audience. So please type your question in the Q&A box at the bottom of your screen at any time, and we will try to get to as many as them as we can. If you do ask a question, if you could please provide this info, what industry you're in, how many employees you have, how often you are paying them, the revenue impact on your business, and then also the date that you received your PPP loan. Good example here below, I'm a service station, I have 5 employees, I'm on a bi-weekly frequency. There's been significant revenue decrease by 30%, and we received our funds as of May 1st. This will help us more accurately answer your questions and conserve time. Okay. First update, 8-week covered period is extended to 24 weeks. So very important update here in the Flexibility Act for borrowers receiving funds prior to June 5th. These borrowers can now choose to extend the 8-week forgiveness period to 24 weeks. This is especially helpful for initial loan borrowers who received funds quickly and have been unable to return to full operations within that 8-week period, or who were rushed to spend the funds. New PPP borrowers defined by receiving loans on or after June 5th will have to use a 24-week covered period regardless. The covered period cannot extend beyond December 31st. Drew, I know you had a few examples that you'd like to share.
Well, I think the most important thing that came out of extending, we had a lot of questions previously about paying bonuses. And when you were restricted to 8 weeks for the covered period or your alternative payroll covered period, reasonable bonuses can be paid, but now there's time to space payroll out beyond 8 weeks. So business owners want to consider all their alternatives to bonuses. And I'll let you keep moving.
Okay, next update. The deadline to apply for a PPP loan is now June 30th. So this is really a reminder for any businesses that have not applied. There are still funds available, and the deadline to apply is now June 30th. Recently confirmed by a joint statement from the SBA and Treasury as of June 8th. So basically, if anybody was thinking of not applying, thinking that they did not have the amount of time to spend the funds in the condensed 8-week period, they should act quickly and apply before this month end. I know, Drew, you had some advice from the AICPA to add.
Yes, there was the executive director of the American Institute of CPAs suggested that CPAs guide their clients to wait to apply for forgiveness and instead focus on helping eligible candidates to apply before June 30th. So there's still quite a bit, something close to 100 billion in funds still available. And the SBA has a new application, Form 2483. Interestingly, just this morning, I reached out to our local banker here at Citizens, and actually that window is closing pretty quickly. They're anticipating cutting off their portal by the end of this week so that they can apply and get the E-Tran number from the SBA. So I would suggest anybody, if you have thought about it, act, reach out to your SBA lender and get going, because that door is closing quickly. Back to you,
Thanks,
Matt.
Drew. Thanks. Next update, 75% rule reduced to 60%. So now borrowers must spend at least 60% on payroll, not the 75% in the original bill. So on June 8th, the SBA and the Treasury clarified that the 60% is not a waterfall and that partial forgiveness is available under 60%. Due to the 24-week covered period, this rule really shouldn't be a problem. This, along with the other changes, should make it much easier to achieve 100% forgiveness for all businesses. Drew, could you please share a few examples around this update?
Well, the original loan was based on 2.5 months times your average monthly payroll, or roughly 10 weeks. Now that the covered period can be lengthened to 24 weeks, it's much easier to focus on big items like payroll. This will simplify record keeping. So, for example, if someone had a $100,000 loan and only spent $54,000 on payroll, then they would have fallen short of the 60%, or at 60,000. So therefore they'd be 10% short and their loan would only be 90% forgivable. We, however, are recommending business owners use the extra time and focus on payroll, which you can spend 100% on payroll, simplify your record keeping, and achieve 100% forgiveness. So when the bank looks at your application and sees 100 spent on payroll, they can quickly approve and move to the next application.
All right. Thank you, Drew. Another change is the anchor date in which full-time equivalents are measured. Previously, June 30th was the date used to reference your employee count compared to what your employee count had been on February 15th. We covered the FTE calculation formula in our previous webinar around what is considered a full-time employee, less than full-time employee, and what formula is most beneficial to use. The formulas will remain the same. The important change to note is that for borrowers using the extended 24-week period, the rehire date has been moved now to December 31st. Reference date stays the same as of February 15th. In addition to the extra time, there are a number of exceptions made available around the FTE safe harbor calculations, all of which help the business owner earn maximum forgiveness. Drew, anything to add?
Yeah, you cannot apply for forgiveness until the end of your covered period. So folks who had PPP money prior to the June 5th date have the option to stay at 8 weeks or convert to 24 weeks. And folks who got it on June 5th or after obviously have to stay now with the 24 weeks. The other interesting thing is this alternative covered period, where you could take your fund date and then go to the beginning of your next pay period, is still applicable in the 24-week period if you choose that. So I think that's important for borrowers to consider. But that component of the 10 months it begins at the end of the covered period. So if people stick with the 8 weeks, you've got 10 months after June 30th to apply. If you elongate this and your covered period ends in November, and then that test period is at the end of the year, you have until October 31st, 2021 to apply for forgiveness.
Okay, so continuing on the FTE and rehire date topic, there are a few ways in which businesses can meet the forgiveness requirements. Previous guidance allowed borrowers to document good faith rehire offers to employees returning at the same hours and the same wages as prior to the pandemic. If employees declined a rehire offer or skilled applicants were not available, signed documentation could be provided and submitted with the forgiveness application and would therefore not impact the FTE count. In addition, the new bill excuse me, allows borrowers to also document restrictions set forth by OSHA, CDC, and HHS, restricting your operations that ultimately reduce your ability to restore prior employee counts. Drew, anything to add on this topic?
Well, yes, Matt, the CDC website has very specific guidelines. They have guidelines for dental, medical practice, restaurants, bars, manufacturing. The list is extensive. Many of the state and local restrictions are derived from the guidelines set forth by CDC, OSHA, and HHS. And most of them, the CDC writes most of these. So, for example, the guidelines for dental practices specifically state to delay non-emergency dental care during the covered period. So in the easy version of the loan forgiveness application, you simply need to certify that you are not able to get back to the same level of business activity due to the requirements related to sanitation, social distancing, or any other work or customer safety requirement related to COVID-19. So clearly, the Flexibility Act is removing those obstacles to get to 100% forgiveness.
Next update, new loan maturity date. So new post-June 5th borrowers now have 5 years to repay the loan instead of the 2 that was originally set forth by the SBA. Existing PPP loans that were granted prior to a June 5th origination date can be extended up to 5 years if the lender and borrower agree. That's the key component there. The interest rate on these all remains the same at 1%. Drew, I know you had something to add on this.
Yeah, so the borrowers prior to June 4th, it's still a 2-year loan. And you would have to have the lender, both you and the lender would need to agree to the extension. However, we believe that the Flexibility Act is designed to make most of these loans completely forgivable, and therefore the additional term a moot point.
Thanks, Drew. Okay, moving on to the employer Social Security tax deferral. So we discussed this in our previous webinar and advised that the ability to defer would stop once or if your PPP loan was forgiven. This rule has been changed, and you may now defer as you wish. Framework to this deferral program is the same as it was, allowing 2020 taxes to defer to the dates of 50% due December 31st of 2021, and then the other 50% being due December 31st of 2022. Drew, please share.
Yeah, so the ability to defer can certainly help with cash flow. That's 6.2% of the employer Social Security payments. However, personally, I'm not a big fan of delaying payroll taxes as a business owner. If you look at some of the IRS publications about federal tax deposits, these are considered trust fund taxes. And if for some reason you're cash strapped when these come due, the penalties are steep and you're personally liable. So don't take this step lightly.
So the Flexibility Act has built in some additional time for borrowers to apply for forgiveness. A previous requirement was to apply within 6 months, and now this has been extended to 10 months. This starts from the last day of your covered period and defers any interest or principal for the next 10 months. Now we're going to jump into the latest form, 3508 EZ. These forms are just released by the SBA, and Drew's going to run through the highlights.
So the first thing to consider is that the new 3508 EZ loan forgiveness application is only 3 pages. The original 3508 is 11 pages. And we believe most business owners will be able to use the EZ form. The first part of the instructions has a test where if you're a self-employed, independent contractor, sole proprietor, if you can check those either box number 1 or box 2 or 3, then you've satisfied the test to use the easier form. I think the big news to listeners here is that if you're as an owner, the limit of the 8 weeks was 15. If you made up to 100 or over $100,000, your limit was $15,385. Now, these have clearly stipulated that owners can take that 8 weeks and extend it out to 10 weeks, which basically the math is 100,000 divided by 12 times 2.5. So if you stay with your 8-week covered period, you're limited to 15,385. If you use the 24-week covered period, now owners can have up to $20,833. Now for employees, that limit is basically 24 weeks and it comes out to $46,154. So it's quite a big change. I think it's very positive for folks to consider the 24-week. There are some industries that, for example, if you're a fuel oil distributor and you're busy in the winter and then you lay people off in the summertime, that might be a perfect business to stick with the 8 weeks. And I'm sure there are other examples. But for most businesses, having the opportunity to, as we go through the totality of this, reduce the paperwork around things like your Verizon phone bill and focus on payroll is probably the simplest path moving forward. And that's what we get out of these documents. These were just released the night before last, and we're all still digesting them.
Thank you, Drew. Another quick reminder for all employers in the process of reopening, it's a requirement to have the newest versions of your state's labor law poster. Additionally, our poster solution has new discounted CDC and OSHA guideline posters that are laminated to help your workplace with prevention and overall awareness around COVID-19. So if interested, please click on the link to learn more about the requirements in your state and product availability, and be sure your workplace is indeed up to code. We're now going to move into the Q&A portion of the presentation.
All right, so this first question is a 4-person LLC with 2 employees and 2 members. Are the members considered to be owner employees? Yes. Self-employed or general partners for the purpose of salary cap and retirement and health insurance? Yes. So the owners would be limited to the $20,833, and their 2 employees could go out the 24 weeks. That would be gross wages of $46,154, and the employees can have the employer share of health insurance and the employer share of retirement contribution added to the employees, not to the owners. Want to take the next one, Matt?
Next question, anonymous. Retirement plan contributions incurred versus paid, also discretionary. Profit sharing versus not employer match are all limited to the covered period. Will a full profit sharing contribution in the covered period be allowed, or prorated, or a prorated portion? Also, if it is for the prior year, 2019 versus current year.
Well, I would take out the prior year because that is not involved, and the rules are not completely clear. They've been clarified on the retirement side, but again, I think it's a moot point. I'd go to the 24-week covered period, focus on gross payroll and state employer taxes, and if the loan was based on 10 weeks and now you have 24, you shouldn't have to bother with the contribution. You'll be able to maximize the loan just on gross payroll.
Okay, next question, anonymous attendee. Initially was limited to 8 weeks for someone earning $100,000 more or year. Has this been extended for the 24-week period?
Yes, so owners extended to the $20,833 and employees extended to $46,154 if you choose the 24-week covered period.
Yeah, same theme. Alan, can you please address the cap for an owner of a C Corp with, can you please address the cap for an owner of a C Corp with employees, and that has changed from $15,385 to a higher amount? Also, are group health and employer match to retirement still excluded?
Yes, the owner share of health and retirement are excluded. The C Corp owner, again, can go to $20,833 and their employees are not capped except at $46,154 in wages, and you can add additionally the employees' cost to the employer for group health and employee match.
Scrap metal dealer, 20 employees, pay weekly. Revenues down significantly since March. Received our loan as of May 8th. Can you please go over the FTE calculation again?
Richard, would you like to join in on the FTE calculation? Because that hasn't changed for someone with the original form. If they can substantiate why they couldn't get their head count back through the EZ form, then the schedules on the long form are not required.
Correct. And if you remember the conversation a couple weeks ago, there's a simplified FTE calculation, which basically says you can take anybody who is not being paid at least 40 hours and count them as 1/2 FTE. regardless of whether they're working 3 hours or 35 hours. And you count anybody getting at least 40 hours as one FTE, regardless of how many extra hours in a week they're working. So if they're working 45 hours or 50 hours a week, they're still just a single FTE. The other method, and we will provide both in our calculations for you to sample. The other is to do a more precise calculation, which is to divide the amount of hours they are working into 40. And if they're working, as a 80% of an FTE, you count them as 0.8 FTE. So we'll provide both in the reporting we do, but those are the calculations you would use.
Okay, next question. We are an automation equipment manufacturer with 26 employees that are paid weekly. We received our PPP loan on 5/6/2020, so we need a little more information on that one. We'll move forward. Are you saying we can do 100% payroll? Absolutely. From Michelle, yes.
Absolutely.
Jim, CPG, 20 employees, bi-weekly, PPP, April of 2020. It looks to be when he was funded. Question is, for 8-week test period companies, is the rehire test date still 6/30/2020, or did that move to 12/31? No, it stays the same at 6/30, correct?
That's right. If you stay with 8 weeks, you can continue with the June 30th test.
Rollin, oh, hang on, this thing's jumping around. Online education business, 20% decline in revenue, PPP loan date, 5/15/2020. How do you make the election to extend to the 24-week period?
You simply, your lender may reach out after 8 weeks with the opportunity to use their portal to file for forgiveness, but you can then tell the lender. So it's an opportunity. You just need to contact your lender and an option. There's no formal paperwork.
Right. The definition of your covered period will define which one you chose to use.
Next question. Oh, sorry. Go ahead, Drew.
No, and now that you have 10 months to apply, there's nothing pushing you to react.
Whatever's more beneficial.
Right.
Next question, Mike. We are in the boutique fitness business. We received funds on May 4th. What if the local government takes a more conservative stance than the state or CDC amid imposes more restrictions that limit our business opportunity at reopening time?
There's no guidance that if the mandate from your local government supersedes that of the CDC, I would take the opportunity to read the CDC guidelines. I don't believe that they're going to scrutinize that. If you've been impacted and can prove from social distancing and cleanliness and all of the requirements, I don't think it's going to be a challenge.
Okay. Next question, anonymous attendee. I missed the first 15 minutes and I'm lost. Can you please send me the recording when this is over? So I'm reading this. Everybody's going to get this recording and you're going to have all the slides sent to you. So you'll be safe there. Next question. Mike, can the covered period be any length up to 24 weeks? For example, if after 12 weeks, we have used all of our funds and are ready to apply for forgiveness, would our covered period be 12 weeks and therefore FTE and other requirements would be in regards to the 12-week covered period? If that is the case, and by the final week of our covered period, we've restored our FTE levels, does anything beyond that date have any impact on forgiveness? We intend to have everything in order by the end of that period, but are uncertain beyond that date. Well,
we don't have clarification. What we do know is that you cannot file until the end of your covered period. So if you choose the 8-week, then you can file. If you choose the 24, you have to wait to the end of the period. And then based on your situation, your ability to use the EZ form would then dictate what your FTE situation is. But the amount of safe harbors, right? You still retain the safe harbors from prior, right? That someone refused to come to take an offer that to come back to their work. You were unable to hire someone capably skilled, and now you've got OSHA, CDC, and HHS guidelines, all as opportunities for business not to come back to the level it was, and therefore you can attest on the certification on the EZ form that you satisfied that requirement.
Yeah, and this is,
I think as well, you're going to have to be careful on what the lender is going to look for. They may not be as flexible as you'd like to be in defining a unique period. They have pretty set guidelines they're getting from SBA, so just be
Well,
careful.
much of the loan forgiveness now is going to be an online portal with a series of yes/no questions. So you answer the questions, fill in the data, and I believe their intent is to forgive most of these, and barring abuse or fraud.
next question, somewhat on the same theme, Kathy, still confused on the safe harbor provision for FTE. Is it okay if it is only meant for one payroll cycle, which might not be the last payroll cycle of the PPP?
Not sure I understand.
Yeah, I think they're saying if they have a peak mid-period. If they have a peak mid-period and they hit FT, they hit the full employment in mid-period, but by the end of the loan period, they're back down to a smaller number of employees. I think it. I mean, I don't see anything at this point that allows you to pick the week that you're going to say, this week I achieved full employment.
Okay, we'll move along. Ronald, assume the owner-employee 2019 payroll plus benefits was $100,000. Can owner-employee of an S corp get $46,154 of his payroll used for forgiveness? Can the owner use health insurance and/or retirement benefits to get to $46,154?
No, that's a no on both. The owner is limited to $20,833, and the owner cannot use any of the health or retirement components.
Next question, Jim. I received a PPP loan of $28,600 and my EIDL grant of $5,000. Do I only have to come up with $23,600 of expenses for forgiveness? Is he referring to? Oh, okay.
Yeah, the EIDL loan, the economic injury disaster loan, was has to be claimed on the forgiveness application, and that is considered a grant, so that reduces the amount of your forgiveness. So the EIDL loan was a grant, and that takes away from your forgiveness amount.
So Jim's right. Next question, anonymous. How will the bank know where the 10-month ends? If you had the 8 or 24-week covered period, will it be assumed by the bank that all have the 24-week and then 10 months after that if you haven't filed, and they will assume you aren't filing for forgiveness?
Well, they will take the loan fulfillment date, and then when you've got 10 months to file for forgiveness. If that lapses, then it's a loan. Otherwise, you will fill out on the loan application your covered period, which is the day that you were funded, or your alternative covered period, which you're allowed, if you have weekly or biweekly payroll, to take the fund date and then shift to the beginning of the next pay period. We recommend using the alternative covered period because it's, if you have weekly or biweekly, because it's going to make your reporting easy. And I think the whole emphasis of this new Flexibility Act and this new application is make your life simple. It's simple to focus on payroll. It's simple to use the alternative covered period because those payroll reports line up. The loan was for 10 weeks of payroll. You got 24 to use it. You don't need to focus on all these other things. You can just consume it with payroll, and your application is super simple. 100% for payroll. Here's my payroll report. I'm out of here.
Next question. Jeffrey, under the 24-week, to confirm, the 46,154 is only for employees, and the 20,833 would be the limit for a Schedule C sole prop with no employees. Yes.
Matt, I'm trying to start in that role of scroll. I'm trying to find what question you're on.
I'm going to read it again.
How far down are you?
Under the, well, we're still kind of at the top. 1123 as a reference point. Under
Okay,
the 24-week, to confirm, the 46,154 is only for employees, and the 20,833 would be the limit for a Schedule C sole prop with no employees.
Correct. That is absolutely correct.
Okay, just confirming. Next question, Kimberly. Nonprofit arts organization, 2 employees, monthly pay, revenue impacted, no amount listed, received funds as of April 24th. We've spent the PPP funds on full-time payroll, rent, utilities, but after 8 weeks, we have left over funds. After about 10 weeks, the funds will run out and we need to reduce staff pay by 50%. If we use the 24-week period, will funds not be forgiven because we reduced staff pay by more than 75%?
She is correct. She is correct. She may, in fact, be better off staying with the 8 weeks and doing the long form and getting as much of this reduced so that she's not in that situation where the entity is struggling because of reduced cash flow and now doesn't get reduction.
Next question, Ronald, for your info, the employer Social Security is the only tax being deferred, which is not trust fund tax and cannot be assessed personally.
What's the time on that one, Matt?
1123.
Things keep jumping around.
I know. We have all the questions continue to roll in, and we have a scroll, and the scroll just keeps going up and down. So it's tough to keep track of all the questions.
Yes, the employer portion of Social Security, 6.2, is the only tax being deferred, and it is a trust fund tax. And it can be assessed personally. Of course, it's not due until the end of 2021, and again, 50% due at the end of 2023. I just caution individuals because if this individual has a situation like the previous question where cash flow is diminished, you just don't want to be in that situation. Just a few days late on a trust fund tax, the penalties start to add up quickly.
Next question, anonymous. When and how do we make the designation of choosing the extension versus the original 8 weeks? If just using proceeds for payroll, would we eat up our loan proceeds within 12 weeks?
Yeah, most likely. And then you would wait till the end of the 24 weeks and start the application process. And your SBA lender can clarify how they will be handling the loan forgiveness application.
Next question, Kerry, how does the EIDL advance grant affect the PPP loan? Well, it's deducted from the total loan forgiveness amount, correct?
Correct. And the EIDL is a grant. But you need to put that grant and the grant number on the application, and then that reduces your forgiveness amount.
Another forgiveness related question here. Katie, question is only health insurance? How about dental, vision, life, and AD&D?
No, it's only health insurance.
Jeffrey, additional question from earlier. And in addition, if the sole prop received $36K in PPP funding, he could use the remaining amount above 2833 for the rent and utilities.
Correct. The question is, how did they get that much amount? But putting that aside, they would not want to cross the 60-40 threshold, right? Because and I'd have to get a calculator out to do that, but if the rent was more than 40%, those other expenses, non-payroll, then it would begin to diminish the forgiveness percentage.
Next question, Matt, and I do think we covered this a little bit earlier. Is there an actual application to extend covered period from the original 8 to the extended 24? Or is it just a request? If there is an application, where do we find that application? So
no, you actually just make that decision when you file for the loan forgiveness. So it's your choice as you file for loan forgiveness.
Next question, Katie. We can get FTE counts back to February 2020 level, but not a full rate. All wages reduced 20% across the board, and not to return in any in the foreseeable future. Is this still forgivable? Well, yes, if you can go to OSHA and CDC guidelines and prove that there's reasons that you don't have your FTE count where it should be, that's the safe harbor, right?
Correct, and it's still forgivable if you're not able to use the EZ form. It's just not as simple. Your paperwork will be larger, but it's still forgivable.
Next question, Dan. At what point do you have to decide if you're using we have a lot on these. If you're using the 8-week or 24-week period, could we wait as long as it is within the 10-month window?
Yeah.
So what's the deadline?
24 weeks is shorter than 10 months. So you're fine. You just choose to use 24 weeks and then communicate whenever I believe that many of the lenders are going to email the borrowers after the 8-week period in some manifestation. And then at that point, you can communicate with your SBA lender, but you don't have a form to fill out. You simply choose a different covered period, the 24-week, look at the alternative covered period if you're weekly or biweekly, and then run payroll, focus on payroll and maximize it.
Next question. Mike, as an owner, is the amount you are able to take limited to the 2833, or is it based on your last year's compensation? Example, if we made 50K as a partner last year, is that the base we have to use?
Right. Well, the PPP for owners was funded based on it depends if you're an S corp or a different type of entity, but basically that component was based off your Schedule C. If you were a single member LLC or a guaranteed payment, but owners are limited to $20,833.
Next question, anonymous. When do you apply for the extension from 8 to 24 weeks forgiveness period?
Yep,
We've discussed
same
that.
question. Yep.
If you were funded, another question, anonymous. If you were funded based on the 8-week calculation and would like to go to, yep, same thing.
Yeah, but she said, they're asking there, do you need to apply for more funds? No, you don't get to apply for more funds.
Oh, right. Yes. Good catch. Abby, Are S Corp shareholders capped at 28,333 amount?
Absolutely.
Yes. Next question. Oh, hang on, this is jumping around a bit here. Has there been, Abby, again, has there been any new guidance on if PPP expenses will be deductible on 2020 taxes?
Oh, that's
the big question.
That's the landmine, right? So that's a big
Thanks,
one. And
Abby.
I would push it out to your CPA, but this is the $64,000 question, right? How will this, if you get forgiveness, will those expenses have to be removed as an expense on your P&L? So we can't go into that. It's too big.
More will be revealed.
Yes.
Next question, anonymous. S Corp and C Corp shareholders being paid on payroll as employees, are they considered regular employees, or are they owner employees subject to those different wage limits?
S Corp and C Corp shareholders, owners, and are limited.
To the 20.
Yep. And one up above that, Marcus, I received my PP loan on April 15th. Can I, as an owner, qualify for the 24-week extension? Yes. And therefore take more than 15,385? Yes. You can take up to the 20,833.
Next question. Julio, I reduced FTE wages by 15% temporarily. How would that affect forgiveness? And Julio has a restaurant downtown. Well, it wouldn't, because he's not over the 25%. You're allowed to reduce by up to 25%, correct?
Correct.
So you should be good there. Next question, Beth. Confirming that we can still use the summer option as one of the 3 options for calculating FTE adjustment. I don't know.
Yeah, that was seasonal, I think she's referring to, right? You
Yes.
had 3 reference periods. Yes, that is still in effect.
Next question, Julio again. Also, how can you switch from 8 weeks to 24 weeks? We covered that.
That's your choice.
Joyce, an S Corp or S Corporation owners cannot include health insurance or retirement contribution in the PPP loan forgiveness. Is this correct?
It is correct. Owners are excluded from health contribution and retirement contribution. Employees are included.
Next question, Ian. Security systems business. I have 25 employees, 6 of which are hourly. Weekly payroll. Loan was funded April 23rd. Since COVID, I have closed the office 1 hour early per day. I didn't lay off anyone, but 35 instead of 40 hours a week. Any FTE concerns?
No FTE concerns. The question will be the clarification. Well, that and whether they can use the easy form or have to use the full form. But no other concern there.
Next question, Mike. And this is an add-in to add to my question. Manufacturing, under 20 employees. We have a biweekly pay cycle. Revenue down 60%. Loan was received on 5/5. We'd need a little more information there. We'll see if it comes in after. Next question, anonymous. I'm an HVAC company. I have 7 employees. We got funded on May 5th. If I choose the 24-week period, can I start my covered period from 5/11 to 5/15 and first paycheck on 5/22? Or do I have to go back 1 week?
It depends. If he was weekly or biweekly, he can shift to the alternative covered period for 24 weeks and move to that 5/11.
There's a high likelihood with an HVAC company you're going to be weekly or bi-weekly. So
absolutely, yeah.
You
so
should
not
be good
a problem.
there.
It would be called your alternative covered payroll period, 24-week option.
Next question, Emily. If we did have an FTE reduction not related to COVID health requirements, do we need to use the long form of the new forgiveness application?
Not necessarily. You need to document what the FTE reduction was, and if it qualifies for the reasons in the safe harbors, then you're fine.
We're going to skip this one. Next question, Michelle. We were funded on May 15th. Our deadline becomes what? 8 weeks is 7/10/2020. Do we fall under having everything in forgiveness by June 30th, 2020?
No, I think this is sort of the crux of what we're talking about today. You can relax. You can extend it 24 weeks. You can focus on payroll, make your reporting simple, and get back to just running your business.
Next question, Emily. If the 24 weeks of payroll costs still exceed the amount of our loan, even using the FTE reduction quotient, would we still be eligible for full forgiveness?
If the payroll costs exceed the amount of the loan, well, once you run payroll till you
just max it out.
You just max out the loan and then at the end of your covered period, apply.
Absolutely.
I think he's asking if would the FTE reduction still apply? Like, does it come off of the maximum loan amount, or does it come off of the maximum payroll amount? And I believe it's going to go back to the maximum loan amount, right?
Correct. Yep. Okay.
Thank you, Richard. Next question, Ann. We will opt for the 24 weeks versus the 8, but we'll have spent the funds after 10 weeks. To clarify from previous question, do we have to wait until the end of the 24 weeks to file for forgiveness till the period ends? Yes.
Yes, you have to wait to the end of the covered period to file.
Next question, Susan. Do you have to notify the bank you received your loan from that you are switching from 8 to 24 weeks? We covered that. We believe you're going to get notified.
Yeah, no need. You're just going to choose the alternative covered period of 24 weeks and or covered period, and then that dictates when you would file for forgiveness.
Next question, anonymous. Can individual employee hours be variable as long as total employee hours match FTE requirement? Can individual employee
the
hours...
calculation is done by employee. It's not, so you can't have one employee having gone from 25 hours to 40 in the same and have fewer. The FTE calculation is at an employee level. It's not a total count.
Thank you. Oh, we're jumping around a bit here. Next question, Richard. The loan amount is based on roughly 10 weeks and the covered period is now 24 weeks. Does the did not reduce salary during covered period mean total salary over the 24 weeks equal the loan amount would meet the did not reduce attestation? The loan amount is based on roughly 10 weeks and the covered period is now 24 weeks. Does the did not reduce salary during covered period quote mean total salary over the 24 weeks equals loan amount would meet the did not reduce attestation? Either of you understanding that one?
I'm not entirely, no.
No.
Yeah, we'll have to pass. I'm sorry. Michelle.
If you want to supply some further information in an email to us afterwards, I know you opened that up. That might help.
Yeah, please do. And for anybody, please do that. And we're happy to answer questions after this ends. We have a ton that are still here, and there's a high likelihood we're not going to get to all of them, but we'll continue. Michelle, next question. How does the CARES Act funds come into play with your PPE? You can't use it.
You can't use PPE with PPP funds.
No PPP and PPE. Next question. Marilena, sewer and drain business, bi-weekly payroll. I received funds 2 weeks ago, over $40,000. Was not planning on using the funds because our business has been steady. We decided to use the funds in case the business does slow down. Do I need to record with the codes you provided for payroll? Also lost one employee. How does that affect the loan? I think she's, Richard, maybe you can jump in here. Is she referring to the COVID-19 codes?
I think she is. She's thinking of the FFCRA credits for sick and paid family leave, which don't apply necessarily. As a matter of fact, those, if you do pay in those are not part of the loan forgiveness.
Right, that would be considered double dipping. I would tell her to take the 40,000 and start using it for payroll. Run it for payroll, and because you never know what the fall will look like. There's no reason not to use it.
Right.
Yeah. Next question, Tom. I thank you, Tom. I hate to beat a dead horse, but I'm a C Corp in which I am the only employee. I have not applied yet.
The window is closing quickly.
Very quickly.
The funds are there. Get to your SBA lender if you have interest, and have your tax returns from 2019 as a C Corp. That's where they'll generate your availability, and that application is Form 2483 from the SBA.
Next question. Jim, I'm a seasonal business. If I reduce pay for an employee after the 8-week period, does this have impact? Does this have any impact on my forgiveness? Well, if he stays in the 8-week, it doesn't, right?
No, it's someone in that situation, seasonality, it may be opportunistic to use the 8-week.
Yes.
I think you're also going to, in looking at that, get to look back at you'll need to use a longer form, but you get to pick your period as a reference also. So they may also be okay.
Next question. If I am limited to pay myself a salary over the 24 weeks of 2083. That was a continuation of that last question.
Yeah,
and
as an owner,
yes,
that is the limit for them. Yep.
Yeah, for Tom. So yes. Next question. Anonymous. S Corp, where the employees on a salary, where the employee on a salary is the president of the corporation, is that employee salary forgiveness limited to $20,843. Not a C Corp and an S Corp has multiple employees.
Yeah, that's an S Corp with one person on salary, and they are limited to that $20,833.
Next question, Julio. We received $10,000 advance, so he got the full amount for the idle. And how does this apply to the PPP money? How's that advance treated, as additional loan, or will it have to be repaid under different terms?
No, the idle advance is a grant, but he needs to recognize that grant on his loan forgiveness application, and that will be reduced. The loan forgiveness amount will be reduced by that $10,000.
Right. Next question, Michael. Balloon decorating events business. We have 5 FTE we pay weekly. We were funded as of June 9th. We can make the payroll funding of 75%. Our business is slow because there are no events. Are they going to be looking at the 75% of previous FTE hours? Also, my loan is through Cabbage. I can't find the name of the institution that holds our loan. How do I access that information? That's more up your alley, Drew.
Well, there's a couple things. There were people jumping into the loan business that were not your typical SBA lenders, Cabbage and Intuit and others. So that's hard for us to know. I would try to work back through whatever online portal or communication I had with them. They recently funded, right? So this has not been going on that long. There's not a lot of events, so they could be slow. I certainly wouldn't reduce wages below the 75%. And, the intent of this is to keep people employed and keep them out of the unemployment line and keep your business as healthy as possible. You may not be able to use the easy form. Those are, I guess, my initial thoughts. But still can get forgiveness. Yep.
Yeah, sorry. Next question, Marcus. Wasn't sure if my question came through. I received my PPP loan April 14th. I am an owner of an S Corp. Do I qualify for the 24-week extension? Already taken the max of 15,385. Can I now take more payroll?
Yes, as the owner, he can qualify for the 24-week, and he can get a raise from the 15,385 to 20,833. Congratulations, Marcus. You get a raise.
Nice. Next question, Nicole. Retail trade, 6 employees, C Corp, where owners are considered employees. Can the employer portion of 401k match be considered for forgiveness for owners?
No.
No.
But if they extend to 24 weeks, it won't matter. Just focus on gross payroll and state employer taxes.
Right. Next question, anonymous, and just let's get through some more of these. We usually wrap up. We go, about 10 minutes after, just on a timeline for everybody. Next question, anonymous. Regarding the idle loans, our understanding is that we add the amount of the idle loan to the amount of the PPP loan to determine amount needed to get forgiven. For example, if the PPP loan, we're awarded $50,000 and then $10,000 on the idle, we have to spend $60,000.
No,
it's the other way around.
The 10,000 they can put in their pocket, and they got 50,000. They can only get 40 in forgiveness.
Right. Deducted.
Yep.
Next question, anonymous. An S Corp owner pay was $70,000 annual in 2019. Can his pay be increased to $100,000 to achieve maximum PPP forgiveness?
No, 70,000 was the as an S Corp owner, if they were the only ones on payroll, right? That 70,000, you would have divided 70,000 by 52 and then times 8. So that would have given them a $10,769 loan. And if they're the only employee, that's all they got. So they would be able to basically take that if they elected the 24-week period. Otherwise, they could only get 852, which would have limited their amount. Actually, it would have been that would have been the total, right? Because it was your average monthly payroll. But as an S Corp, they're limited to whatever that amount was. So they've already been funded. So they can only follow the new rules and go from the 15,385. They weren't at $100,000 rate. So I think it's a moot point.
Next question, and this is kind of going back over your slide, Drew. Anonymous, could you please clarify the 24 weeks and this 46,154 employee and the 20,833 employer? These new changes.
Basically, everybody is stopped at $100,000 on an annualized basis. What the SBA and Treasury didn't want to do is make this a windfall only for owners. And so they've limited owners at 20,833, but they've allowed employees to go out the full period. But it's hard to get to 46,154. It's hard to have 24 weeks of payroll when the original loan was only 2.5 months. So it's just an interesting, I mean, those are the limits, but everybody's in a different and unique situation, right? Somebody could have 6 employees who all were at $100,000 plus, and they have the potential to get there.
Next question, anonymous. If employees have contributed to a 401k plan in the past, will they be allowed to continue to do this in the payroll supported by the PPP? And what happens to owner employees of that person's 401k contribution if we are an S Corp?
Well, if it's a 401k safe harbor where there is a match, then the match is an allowable expense for employees, but not for owners. But again, if they extend out, they don't need to worry about 401k contributions. There's more than enough money in gross payroll to
Keep it simple.
keep it simple. Yeah.
Plenty of runway. Next question, anonymous. For calculating payroll, I take the gross payroll plus the employee taxes to calculate the amount for forgiveness.
Plus state employer taxes, right? It's the employer taxes that's paid on the state, which is unemployment, and depending on your state, those associated. Here in Massachusetts, we have the training fund and EMAC, as well as unemployment.
Next question, anonymous. I'm an independent contractor. We received funds on April 22nd. Original calculations at 8 weeks self-pay was under the 75%, but now the new rules at 60%, we definitely should qualify without waiting for the 24 weeks. Any reason to wait for the 24 weeks for full forgiveness if we already crossed that 60% threshold at 8 weeks?
I mean, some
I don't
folks may
think
want to
so.
get it all wrapped up. If you can use the more in-depth, you've done the paperwork, and there's no reason not to. I mean,
Right.
your goal is 100% forgiveness.
Next question. Anonymous. If I own my own dental office building, can I charge myself an assessment for building upgrades and include this in the 40% forgiveness portion?
I doubt it.
Yeah.
The payments to for a lease, you would need to have a lease in place. You need to document that lease, that the obligation was in place prior to February 15th of this year, and then note the payments. And in this case, it's a related party payment. I'd focus on payroll, but you'd need to have those documents, and then that's just another thing for the bank to get stuck on and challenge the forgiveness. I'd avoid it.
Next question, we'll address a few more of these. Michelle, we have W-2 and 1099 contractors. Are 1099 contractors included in the wage totals, or can we only use W-2 employees?
Only W-2. The
W2.
1099 should have gotten their own PPP loan on whatever entity they work for.
Next question, Lynn, can you use the 3508 EZ form if applying 8 weeks eligibility, or is that only available for the 24 week eligibility?
A very good question.
A quick glance would say that it's not related to the 24 weeks. But where you get into trouble is some of the language, and I'd have to look at it again, but around the safe harbor dates.
I agree, and my discussion with a local citizens banker, their intent is to email clients that took loans after the 8 week covered period and inviting them to use the portal. So I would confirm that it's probably fine to use the EZ form with the 8 weeks.
Next question, Sue. If owners are capped at $20,833, could they be paid for their regular salary by non-PPP funds? Sure.
Absolutely.
Is the 20? jumped around here, is the 20,833 for owner employees for the 24-week covered period, and is the 15,385 for the 8-week period?
Correct. That's absolutely correct.
Leo, to clarify, if you are an LLC, does the 20,833 limit on owner pay apply since owners are paid as employees?
Well, right. So there's single member LLCs that don't get paid through W-2. And then there are LLCs that file additionally to be paid as, say, example, an S Corp. And they are in fact W-2 employees. So both of them are limited to the 2833 as owners. It's just whether they would take it through payroll, if they were an S Corp as employees, or if they would take it as a distribution. But both are legitimate, but you'd need documentation.
Next question, anonymous. PPP loan covers the mortgage interest. What about the principal part of the loan?
It's not covered.
Next question. Christina, surveying business. I'm six employees. We run a bi-weekly payroll. My loan was funded on April 30th. How long must staffing levels remain at pre-disaster level FTEs?
Well, if they choose the 8-week covered period, then it would be 6/30.
Yeah,
June
June 30th. If
Yeah.
they extend, it goes to 12/31,
Correct.
whichever date. Next question, Valerie. I am the owner employee. We're an LLC. We have 10 employees total. 2 employees paid salary and commission. Sales are down 50%, therefore not making the same as first quarter of 2020. Our loan was funded as of 4/17. Those employees have to make at least 60% of what they made in first quarter to be forgivable. No, that's mixed up, right? It should be 75%. Yeah, and it's easy to confuse, but 75% is the wage amount that needs to be restored. You cannot dip below 75% of what you had previously paid employees.
But again, in this particular business, she may also qualify under all of the CDC exemptions and such that that Drew was mentioning. So should take a careful look at those regulations.
Thank you. Next question, Christina. Sir, oh, this is a duplicate. Oh.
Well, this is the idle loan.
Oh, okay, no, this is, go ahead.
Yeah, if the idle loan is obtained nearer to the end of 2020, then it would still impact PPP. Yeah, so originally the idle loans were supposed to come out almost instantaneously. I know of one business that literally just got it today when they applied in early April. So their PPP was funded 12 days after the application and they just got their idle loan. But regardless of when the idle loan comes in, it still needs to be represented on the forgiveness application. And it is a grant. It's not really a loan, and it is reduced from it's a reduction of the PPP amount.
So, we're at 12:15 right now. We probably have another 10 to 15 questions. Drew, Richard, shall we continue on, or do you want to wrap up?
I do have a time crunch, so I am going to have to drop off, guys.
Yeah, and I'll finish up.
Okay. Next question, anonymous. Reading the instructions of the EZ form, it states, do not add employer retirement contributions made on behalf of a self-employed individual or general partners because such payments are already included in their compensation. And contributions on behalf of owner employees are capped at 2.5 months worth of 2019 contribution amount. Doesn't this mean you can include at least a portion of employer retirement contributions for an S Corp owner employees?
No, I don't believe so. I don't believe any of the employer contributions are included.
Next question, anonymous. S Corp weekly. I receive a check. How do I calculate my payroll cost?
Is this for applying?
Yeah, that's what I'm saying. I don't know if it's if you received the loan yet, but we're happy to answer that one offline. Next question, Mark. We are a company with 18 employees and payroll is paid once per month. Would we be better using the 24-week period? It depends.
Well, it does, and it's a question of whether what day they were funded. Even if they used the 24-week period, they're probably going to have to prorate payroll at the beginning, maybe not at the end, because they'll run out of funds during the 24-week period. But they're not, as a monthly payer, you're not able to use the alternative covered payroll period. So the only challenge for them is a slightly more difficult reporting, in that they may have to prorate a payroll to fit into that. They could also just avoid the payroll. Well, that's they're going to have to prorate.
Next question, just to clarify, FTE calculations only apply if employer reduced headcount.
Correct. Well, yes, because if they are if they've never reduced their FTEs, they should be able to use the easy application and certify that in the 2-pager. So it's much easier.
Next question, anonymous. Is the $20,833 for S Corp owners the amount per weekly? No, it's for the whole period.
It is for the whole period.
Next question, anonymous. I received my PPP loan on 5/23/2020 and received my, I believe this is EIDL, a little bit more early, my EIDL grant. I have a Kumon after school and math reading program. Went online from April, lost about 30% revenue, had about 9 employees, only able to restore 5. Will I need to return my EIDL grant?
No, the EIDL is a grant, right? And nope.
No, keep it. Next question, Kathy. We are a restaurant in Salem, Mass. We will meet our FTE for October, but no other months. Is this enough to get the safe harbor protection for full forgiveness? Well, there's a lot of components.
Yeah, I would document as to why you're not able to, right? But this is obviously a super seasonal business because people go to Salem in October because of the historical reason. And
right.
Yeah.
Okay. Next question, anonymous. I have 1 employee, C Corp, and very few irregular scheduled paychecks. I've already exceeded the $20,833 max. Is there anything other than waiting for the 8-week period to expire and enter the 24-week period to do before I apply for loan forgiveness? Well, it's when the covered period ends, right?
Right, exactly.
Next question, Debbie. Is the EIDL advance grant the only amount that has to be deducted from our forgiveness? We also received $106,000 EIDL loan that we have to pay back. So it is my understanding that only the advance grant of $10,000 has to be deducted. This is correct.
Yeah, I don't know if this is, it doesn't look like this is a PPP loan. This looks like the 10,000 because it says I received 106,000 EIDL loan, which is possible, but those have been very slow. So the 10,000 is a grant, but the 106,000 would be a loan that needs to be repaid at some term. But this doesn't have anything to do with PPP as I'm reading it.
Yeah, I was assuming it. We've been in this PPP wave of questions, so good catch. Next question, Julio. I didn't include the employer taxes in the original amount. Any chance we could ask for that amount?
No, whatever PPP you have is what you're going to get, and that window is closing for anyone who didn't apply.
Next question, anonymous. If we have 3 PPP at 3 different tax ID restaurants, so 3 loans, 3 different restaurants, can the owners get paid 8 weeks in one company, the next 8 weeks in another, and 8 weeks in the last company, so long as the total pay is under $100,000 per year? Is that for all locations, or are they looking at that as a total, as if they're all related?
That's a good question, right? I don't know if I could answer that. Basically, they have 3 separate PPP loans under 3 separate tax IDs.
Yeah.
And I don't know how the SBA is going to look at affiliated entities. So I would go back to my SBA lender to clarify what they're considering for affiliates and what the limit of owner compensation is in that case.
Next question, Nicole. Can a C Corp owner employee portion of 401k deferral be included in forgiveness? Can a C Corp owner's employee portion? No.
No.
Next question, anonymous. Would an answering service for your company qualify as a utility expense?
No, it's a business service.
Next question, Debbie. My idle loan has to be paid back, but the idle advance is a grant and does not have to be paid back, correct?
Correct. The 10,000, or at some point it was 1,000 per employee, up to 10,000. That is a grant, doesn't need to be paid back. The loan does.
Anonymous attendee, thank you so much. Thank you for joining. And then we have our last question. Debbie, sorry for the confusion. My idle question is in regards to my PPP loan. So I think she clarified that one that we were, let's go back up here a bit. Yeah, so Debbie on that idle advance, it looks like she's got a PPP, she's got an idle grant as well as an idle loan. So in that case, yes, you have to deduct the 10,000 part of the grant from the PPP forgiveness portion.
Correct. And then the idle advance or the idle loan is a separate note, a promissory note separate from this other discussion.
Okay, so thank you all for joining us today. We still have quite a few folks on this that have ridden this out all the way. So I hope this was helpful. Again, as we mentioned earlier, and you'll all get a copy of this webinar. Our contact information, myself, Drew, and Richard, is listed here. We're happy to answer questions ongoing after this. And please stay tuned. We'll, as we learn new material, we'll be sharing with you as it comes out. Anything else, Drew?
No, thank you, Matt, and thanks everybody for attending. Again, we'll email if there's any updates, and if there's another webinar required, we're happy to jump online and share that with everybody. So thanks and have a great day.
Yeah, thank you, Drew. Thank you, Richard. Take care, everyone.